Hello, good morning, good morning. Let me make sure I have sound. And okay, so first of all, if you are watching this recording, thank you very much. Make sure you hashtag replay so I know you were here. And if you're watching this on YouTube, because I do post all of my Facebook live broadcasts on my YouTube channel at Home Biz Tax Lady, you can find me there. Make sure you subscribe so you don't miss anything. You can skip ahead about to the 2-minute mark, I'm guessing right now, to get to the content. But while you're getting on, I'm going to share this out to some of my favorite places. And hold on. There we go. We got sound. Awesome sauce. All right, let me share this out to some of my favorite places. So when you hop on, let me know who you are and where you're from, so I can shout you out and say hello. Y'all know my brain does not work when I'm multitasking. Da, 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 da. All right, that's one. Hello, hello, hello. All right, I don't know what just happened there. All right. Let me share this out in a couple more places, guys, and we're going to get going because this is some good stuff today that you need to know. One more. I want to make sure I put this in places where folks are going to get the most value out of this. All right. Let's go. Let's get down with the get down. All right. I'm at a minute 55. I said 2 minutes. Close enough. All right. So first of all, I want to welcome you to the show. My name is Lysandra Everett. I am the Home Biz Tax Lady. I help home business owners win the tax game by helping you keep more of the money you earn and paying less to Uncle Sam in taxes. Good morning, Erica. Hello, Diana. Hey, Shantae. So today I'm going to be talking about the earned income tax credit. I got a question about this because I shared in a broadcast earlier this week that one of the measures that has been passed is that for tax refunds that involve the earned income tax credit, those refunds are going to be held until the IRS can verify the income. Held for how long? Well, however long it takes for them to verify income. Now, with people who work a job, that process may go a little bit faster because we're talking about computer matching here. You know, when you get a form in the mail, whether it's a W-2 or something like that, there's a computer match because the IRS already has a copy. So they're just waiting on you to file your taxes. So you've got your W-2 that you file and the W-2 that's already been filed by your employer. They match. Fantastic. Everything else, you know, adds up. Great. You'll get your refund. Now, the one thing that people don't realize is that I think the estimate is 7 million small business owners qualify for the earned income tax credit. Now, remember I said that the refund, if you're getting a refund, is going to be held until the IRS is able to verify your income. Well, with business owners, you submit that information. So unless you're getting a 1099 that, again, that allows that computer matching, I really don't know how they're going to do that because there are not enough IRS people to verify the income of, approximately 7 million business owners who qualify for the earned income tax credit. Okay. So then I got the question of, well, what is that exactly? Because I'm not sure if I get it or not. Okay. So the first thing to find out if you actually have received the earned income tax credit, within the last year or so, go to your tax return. If you don't have a copy of your tax return, this is a virtual smack on the hand. You should always have a copy of your tax returns. I say keep them until you die. Some people don't want to hear that, but I say keep them until you die. But anyway, you need to look in your tax return for a schedule EIC. That's what it's called, a schedule EIC, earned income credit. All right, so now let's talk about what the earned income tax credit is. Now, this is something that actually started in 1975, and it was supposed to be a way to really help low to, to middle income workers, to moderate income workers, really help combat the Social Security tax that started coming out of their checks, as well as the rising costs of food and the cost of living. So they implemented this earned income tax credit as a way to help these folks out. It was also commonly known as the poverty tax credit, okay? And it was supposed to be temporary, but then it became permanent in 1978. And then after that, Reagan said, "Ooh, we totally love this," and they totally expanded it. Okay. So that is the brief history of the earned income tax credit. Now, here's the thing about the earned income tax credit. It really does, it does what it's supposed to do, right? It's supposed to help keep people out of poverty. The last statistic I saw was from 2015, where 1.4 million women were able to use their earned income tax credit essentially to help keep them above the poverty line. Okay. Sorry, fellas, I don't have statistics for y'all. Forgive me. That's what I got. Okay. So anywho, so then the question is, well, do I qualify? So I'm just going to be running off some numbers, okay, just to give you an idea. All right, so first of all, let's talk about filing statuses. Remember, I told you that married filing separate is the worst filing status that there is. Okay, this is one of the reasons, because if you are married filing separate, although you may qualify on paper, married filing separate status does not qualify for the earned income tax credit. So if you're filing single, head of household, if you're widowed, qualified widower, married filing jointly, then you qualify for the earned income tax credit. Good morning, you guys. Thank you so much for jumping on. And listen, you might want to share this out because this is going to be some good stuff. Okay, so now if you have qualifying children, so let me give you an income range. So if you're filing single, head of household, or widowed, if you're claiming 0 children, if your adjusted gross income is less than $15,000, $15,010 to be exact, then you qualify. All the way up to if you're single, head of household, or widowed, and you claim 3 or more children, and your income is your adjusted gross income is below $48,000. Okay. So in that range, married filing jointly, 0 children, your adjusted gross income has to be below $20,600. Up to 3 or more children, your adjusted gross income has to be below $53,930. Okay. So there you go. Now, if you have investment income, you can have no more than $3,450 in investment income. So what kind of credits are we talking? Okay. So with no qualifying children, the minimum is $500 up to, with 3 or more qualifying children, a $6,300 credit. So now let's talk about how this looks in real life. Let's say that you have someone who is a low income worker, okay? And they might have a, $300 tax liability, okay? Because the earned income tax credit is a refundable credit, like people are wondering, how is it that people that don't work get all this money back? This is how. Because if you've got 3 or more qualifying children, if you qualify for a $6,300 tax credit and your tax liability is only $300, well, then you're going to get $6,000 back. That's what a refundable credit is. A credit itself is a dollar for dollar reduction of your tax liability. A refundable credit is going to take that tax liability into consideration and refund the difference. So this is how people are walking away with $8,000 and $10,000 refunds. The earned income tax credit is one of the ways. Okay. Is that making sense now? Like people are wondering, like, how, I'm over here busting my butt and sweating and all this, and they seem like they ain't doing nothing. I got to write a check, and they're sitting over there getting $10,000. Earned income tax credit, baby. That's how they're doing it. And, this is one of the most expensive tax credits that we have. Not only in the amount that it pays out, but because the amount of fraud as well, because, people be trying to claim, Susie and Ray and all them, and, they're doing fraudulent stuff. And then when they get busted, they got to pay this money back. And 9 times out of 10, they can't even afford to pay the money back. Okay. So now there are a couple of tests, we talk about, it's like I talked about, there's so much fraud that's going on with the earned income tax credit. And that's why tax refunds were delayed this year for the filing year of 2017. They were delayed till February 15th. They weren't issuing these refunds because they're saying, look, we're trying to really make sure that the people that get the credit are the ones that's supposed to get the credit. Okay. But again, there's fraud because you go to Ray Ray's Chop Shop and get your taxes done, and then they do some hinky stuff, and then there you go. All right. So let's talk about the relationship test. Like, who would qualify for you to claim in order to get this earned income tax credit with the qualifying child? All right. So first, it's the relationship test. Your son or daughter, adopted child, stepchild, or foster child, or any descendant of them, such as your grandchild. Okay. So we're talking direct lineage, or, or you've adopted a child. All right. Now, it can also be a brother, sister, half brother, half sister, step brother, step sister, or a descendant of any of them. So your siblings and their kids. Okay. So if you have your sister's kid or your brother's kid and you're taking care of them, you can claim that. Now, please note, I did not say your cousin. Okay. You cannot go borrow your cousin and claim them as a qualifying child. Your cousin does not qualify. Your niece, nephew, your brother, sister, those qualify, not your cousins. Okay. All right. Now let's talk about age. So at the end of the filing year, your child was younger than you and younger than 19. Okay. So you're like, okay, wait a minute. What you mean the child is younger than me? Okay. People adopt folk. Okay. People adopt folk left and right. Okay. Can I just be real with you? You'll adopt somebody in a minute because so let me give you an example. So, way back, one of the ways that, this is about to get, it's not political. It's just one of those things that happened, but you can't necessarily prove that happened. One of the things that, that homosexual couples would do in order for them to be able to inherit, in order for them to be able to, to live together and all of that, one would adopt the other, right? So that way, so now you have a mother, on paper, you might have a mother-daughter relationship, but in reality, you're a couple. So that's just one of those things that you knew happened, but you really couldn't prove it unless you knew it happened. So that's why that's in there. All right. So if you have a child under 24, that's a full-time student. Or if you have a child at any age that is permanently and totally disabled. So under the age of 19, if they're 19 or older and they're not a full-time student, you don't qualify. If they're a full-time student up to the age they're 24, which is when they should be graduating from college, not on a 10-year plan, then they would qualify. Or if you have someone that's totally disabled. And the child must live with you, or you or your spouse for more than half the year. Okay, so yesterday, somebody asked about, what if my child lived with another parent for 6 months? Okay, so this is why more than half the year really does matter. More than half the year, not half the year. Because of this earned income credit, the child tax credit, and the additional child tax credit, okay? So when you look at the thousands of dollars that could be at stake here, now you see why people lose their minds. But the truth is, if you work this stuff out in the beginning, this will not be an issue. All right. So that half a year, whoever is the custodial parent gets to claim the child. Okay. But if the custodial parent can say, hey, all right, the other parent is going to claim them. Okay, that's cool. But next year they back to me. And people do that all the time. Okay. They, establish it where mom claims them one year, dad claims them another year. They go back and forth, works out great until somebody forgets. Right. Now, but if you're going to fight about it though, then the question is who wins? Well, if it's an absolute tie, if you can't show where one person, lived, if the child lived 182 and a half days, with each parent, then Who wins? Well, then it's the person with the highest adjusted gross income. That's who wins, regardless if it's mom or dad. But this is why you really want to, like I said, you want to make sure that you get this settled before y'all go filing taxes and stuff, because you really don't want the IRS in your business. And then when somebody goes off and tries to race and get and file the taxes, and you weren't supposed to claim them, and the other person goes to file, it's just ugly. It's a big mess, because the person that wasn't supposed to file, you're going to have to pay that money back, plus any if you actually owed, okay? Penalties and interest is just not cute. So the earned income credit overall is a way for really to keep people out of poverty. That's what it's designed for, okay? But, like I said, with this whole measure being passed of, the IRS having to verify income before they release refunds that have the earned income tax credit, I don't know how that's going to work out for business owners. Somebody asked me, before, like, what are you going to do? Like, I really don't know. The only thing that you can do is make sure that you have clear and detailed records of your income, because, in the audit, yeah, you have to verify the income if you get audited, if you're in that percentage of people that get audited. But just lottie-dottie and everybody that gets their earned income tax credit, I mean, like I said, for business owners, we're talking about 7 million people. Who got time to go verify income for 7 million people? Ain't nobody got time for that. The IRS ain't even got time for that. I don't know what they're going to do. And they're not releasing any partial refunds either. So if your refund consists of another tax credit or something, they're not releasing that either. If your refund has the earned income tax credit with it involved in it, thou shalt not get any money until they verify said income. I don't know how that's going to work for us business owners. We'll just have to see. So nuts and bolts is, don't be waiting on a tax refund for this when you file your taxes, because I just don't know how that's going to work out. I hope I hope this goes smoothly, and it'll be a few weeks like it normally is. But again, you really just don't know until it starts to work, until it starts happening. Okay. So yeah, so that is the quick and dirty on the earned income tax credit. So if you got some questions about it, definitely hit me up. Make sure you review your tax return from last year if you don't know. If you don't have a copy of your tax return, go get one, okay? Go get one and keep it until you die. And okay, so all right, Erica, we'll talk about that. Business owners who are married and spouse has a regular job and a different life. All right. Cool. Okay, so that's it for me, you guys. Thank you so much. Make sure you hang out with me over in the Tax Players Club. That is my growing community. I would love to have you over there if you're not there already. www.taxplayersclub.com. And if you're not subscribed to my YouTube channel, you can find me over there at Home Biz Tax Lady. All right. So thank you so much, you guys. I'll see y'all next time. Bye.